Good morning, good morning, good morning. How's everybody doing? This is MC Fire coming at you again with another hot take on the markets. Today is the 22nd of February. So yesterday was pretty eventful. What you were able to see was if you were watching the markets on Monday and Tuesday, pretty much the markets sold off. Let's bring that to the front of the classroom now. Pretty much the markets had sold off pretty drastically. Putting in some outsized candles to the downside, essentially completing rotation, moving into the moving average cloud. For anybody who's want to be a buyer in the market, this is kind of relatively good news because a whole bunch of red is not necessarily good for us. So we're basically, for the overall market, looking for a trigger to the upside here. Same thing for the SPY. If it's going to do that, right? Reacting off rotational zones and setting up candles rotationally, that could be a good look for us. Okay, we're maybe looking for some potential other confirmation here on the downside into this level. Maybe we can get a tighter, juicier candle. But if the market wants to buy back above those key levels, that 597.79, looking to take rotation back to the upside. Now, there is some sentiment creeping in negatively, so just watch out for keep your risk small. Remember, if this is a rotational zone, go ahead and just set your alert below the low. Hit your alert below the low there and prepare for any potential downside risk. Respect your buyers. Now, we want to bring to the front of the classroom some other potential plays as regards to this week, right? We have our new kids on the block, and that's primarily what we're going to be talking about today. The in-play list is extremely long because so many. Yesterday was a very intense day for the overall market. Really, this whole from Friday to today has been really, really intense. But the first thing we're going to bring up to the front of the classroom is Carvana. Shout out to Carvana, showing very, very. This is exactly kind of what we want to see from Carvana, making higher highs, higher lows, nice pullback. You get multiple days of extreme selling, and then a volume candle actually the other direction. If most of the market was selling off yesterday, you're seeing spurred on buying. So a break of that negative candle there of 225.76 is going to be optimal. Okay, we're looking for that, and then if you potentially can say, oh well, we could potentially have a stop below the low there. Put your risk and set your risk accordingly. Now, where could you see this going? Well, ideally, I'd like to see it at least get back up to 266 because there's a gap there. So maybe it could potentially fill the gap or even set to the upside and make new highs. That would be sweet. Robinhood. So shout out to the hood. Very similar story to what we saw with Carvana. Massive selling off. A little extension here in the moving average cloud. So you've essentially got 2 weeks of selling off at this point for a Robinhood. And then for Carvana, this is the, we got 1 week last week and then this current week. So you could maybe see a bounce in both of those. NTNX could potentially be traded to the upside here off a break of 68.05. 68.05 on that pullback would be recommended. Now, be careful though. You do have earnings, so it's mixed bag with earnings. Set your risk accordingly. SMCI, nice pullback. New wave, nice pullback. New moving average cloud with a nice pullback there. And what that's going to give you too is, if you guys remember one of our previous videos where we talked about the red bar ignored or green bar ignored videos. Here's your green bar, red bar ignored plays right here. You got green bar, 2 red bars, green bar, boom, explodes out of there. It's not too bad. And then you've got a red bar here, right? As it pulls back to basically the high of that block there. So if it pulls back to the high of that block there, and if we get a reaction, could definitely see that. There's also multiple confluences in regards to the moving average cloud and that things of that nature. So would love to see a break above 50.82. Would definitely be an extremely bullish situation there for us. SoFi. Been looking for a reason to get into SoFi here. This is about as good as any reason currently. So SoFi, nice potential trigger if we can get above 1427, reacting off of the 1376 level rotationally. But I would definitely still keep my stop kind of tight. This is really good for if things can trend sideways. You could potentially sell puts as well as buy calls. So it's something that we could look at for selling puts here and looking to acquire some shares at a level. Ideally, we want to go ahead and take the calls and run that play to the upside there. Good old Tesla, walking Tesla down. It is in a downtrend currently, or is about to be in a downtrend, I would say. Didn't really get any reaction. Actually, it did exactly what we kind of warned that it could do. Taking the play here, it reacted off of that 361 level. Didn't really get the break and hold above that level, and it did end up failing. So technical analysis, for those people who think that technical analysis is just hogwash, well, there you go. It worked out just fine there. You got you. So shout out to you. I like the parabolic moves in you, but what's unique is we're getting to a point now, or we can you're starting to see an uptrend here in you, and we could potentially get positive here. If we can start getting positive earnings, I can definitely foresee this thing blowing up. Very similar to Palantir. When you look at PLTR, bring it to the front of the classroom here really quick. For the longest time, you see like negative earnings. You probably can't see that. I'm trying to zoom in here so you can see that. So negative earnings for something like Palantir. And then what does it do? Sell off, right? Negative earnings. There we go. Boom. Now, as we start to go positive here, right? The market starts to react, right? They're starting to gain revenue. They're starting to gain traction. So getting in early to that, if it's continuing to trend that, hey, we're starting to make revenue, is good, right? Negative here, positive here, negative here, positive here, right? So you're starting to breathe some life into the into your actual wallet. Well, then now as we start to go positive, people see value in the company, and then voila, right? Very similar story. It's a software company, right? Negative, very negative, and then now as we're starting to go positive, awesome, right? People are going to start jumping on the bandwagon early. Is what's clear is the price that people are willing to pay when it's not earning anything, and then the price you're willing to pay, $200 when it's not earning. Then how much more are you willing to pay, seeing that it could be profitable? XYZ. So XYZ here, massive sell-off in XYZ, and this probably be a really good opportunity to buy shares. If you're looking to buy shares at 3 ATR, negative 3 ATR would be an ideal situation, right? Ideal situation here for XYZ. And it's looking like a pre-market, it's not getting too much better. So like you could say, okay, I could wait for a trigger, but at 3 ATR, buying shares isn't necessarily a bad idea. Even in a downtrend. We'd like to buy shares at 3 ATR in a downtrend. as a place to average in, believe it or not. If you're averaging in, then 3 ATR is probably your best bet. Negative 3 ATR. Doesn't mean it can't go lower. It's just a good place to acquire some shares. Always been a great place to take some buy. Like if you take a buy at 3 ATR and it rips, I think you'll be just happy. Same thing here. If you're averaging in all the way down, that's not bad either. If you're averaging in, for those who don't know what like averaging is, you're buying the stock as no matter what, like if it goes up, goes down, it doesn't matter, on periodically. Well, for me, like there is a window in which you want to purchase certain stocks, and at 3 ATR is kind of that window. So you're looking at buying it on momentum triggers and at negative 3 ATR. All right, so those are your main kids on the block as regards to the plays. We're going to look at maybe a couple of other these that you see. There's a lot of them, and I only want to bring a few of them, the main ones to the front of the classroom. You got Walmart here. We talked about Walmart yesterday and Monday. Massive sell-off here. Walmart's reporting that the consumer, different kind of consumer, due to the fact that people's wages haven't really increased. But what you're seeing here is, a decent trade kind of kicked off. As of yesterday, you had a setup. It broke above. Nice run for Walmart there. You would have made about $3 on that move. Would have been really, really, really sweet. It also did get above this rotational zone. So very powerful move for Walmart post earnings. You don't have anything you have earnings in your rear view. So very, very powerful if you were able to take that play from our video yesterday. You also have, UNH triggered at 3 ATR. Crossing above here. That was a pretty big one. You have Morgan Stanley. Morgan Stanley also is potentially moving, can potentially move to the upside from the wave. So watch that. It's in no man's land currently. It's not going to be reacting off any price levels. Ideally, you'd want to see that confirmation. But there it is for Morgan Stanley. MLM, same thing as we've kind of been talking about. Once it gets down close to the 3 ATR level, you're throwing setup candles. If you're looking to be a buyer, long-term buyer of MLM, then you could potentially take that, but not necessarily on our radar. It's just something to keep in mind from a structural standpoint when it gets extended. Johnson & Johnson, it's still ripping higher, believe it or not. Absolute massive. So we made most of our traction on the downside. And let's say, for example, if you wanted to be a buyer at 3 ATR, you would take a little heat, but then wham, look how it's absolutely ripping. So shout out to Johnson & Johnson, and shout out to us for making play on the way down. But let's say, for example, you took some shares here at 3 ATR, you really can't go wrong there. ISRG here. Look for a potential rip to the upside for us, the surgical company. Definitely would want to trade it as options so you can get the maximum leverage there. We're going to tap Google, and then we're going to tap Amazon. So Google is in an uptrend. It's got a nice juicy setup candle there. So watch for Google as it crosses below the moving average cloud. Put that setup there. Nice sell off. About 4 or 5, going on 4 weeks of selling off for Google there. And so potential for a setup in a major player like that. Gotta shout it out. Same thing for Amazon. Gotta shout out a potential pullback in a major player there. You do get an outsized candle green to the upside so far. But I would love to see a break of that 216.29 level before we take any major action. So those are your takes for today, guys. Appreciate you guys tapping in with us. Like I said, set your risk accordingly. Like the biggest thing, even though the market's selling off, is don't panic sell, don't freak out. Typically we've had 16 recessions since, the 16 recessions, I forget when, but 16 major recessions, I believe, since the market crash of like 2029. Right. So don't think that this one's going to be any different, right? You're seeing a lot of volatility, but what I'm not seeing is a reason to necessarily, sell the farm. And that's kind of the point, right? If you're looking to be a buyer, there's opportunity down here, but set your risk accordingly, right? And yeah, that's pretty much it. All right, guys, have a wonderful day. We'll tap in with you soon. Take care. Bye bye.